Welcome to F.A.C.E, Tim.
Show my screen. Let me try that button. Okay, very good. Can you hear me okay?
I can hear you loud and clear.
Oh, excellent. Well, thanks so much for inviting me, Dale. This is quite an honor and a pleasure here. So I'm trying to get used to all of the controls that we're seeing here. You should see my desktop here, which is not very informative.
All your private things.
All my private, the stuff we want to conceal here, right?
Yeah. So Tim, really a pleasure. We have your a bunch of charts up now, and I read the link that you sent me about your ranking in Timers Digest. Congratulations on that.
Well, thank you.
And not just a flash in the pan, but for many years, your consistency of being ranked in that, that's a pretty prestigious ranking. Who put that out, Timers Digest? That wasn't Mark Hulbert, was it?
No,
Davis?
Jim Shugart, I think is his last name. But he's been doing it for about 30, 40 years, and it's been,
right.
He publishes every 3 weeks, and this is issue number 659, I think. So
okay, yeah,
he's been around a while, and what he does is track.
So have we, right? Been around for a while. You and I?
Yeah, we've been around a while also, right? I'm about to become a septuagenarian here in about another week. So.
All right, well, why don't we do this? Let's take our right foot out of the La Brea tar pits and talk a little bit about your journey, Tim, because, the journey's interesting of how people get from point A to point B. So I'm interested in, at the beginning, was it the planets that led you to looking at the markets, or was it the markets that led you to looking at the planets?
Well, a little bit of both, but actually I got involved in looking at the planets first, and it was quite an interesting adventure along the way. I got intrigued with planetary alignments and the study of astrological factors from a very early age. And then when I was an undergraduate in college, I decided I was going to begin to do a kind of a focused study of the subject, and began to learn some of the techniques involved. I was curious about the markets at the time, but I never quite made that connection between the two. So that was another area of interest for me. And I, did a little bit of graduate study and went to work as a newspaper editor, and had an advertising and marketing agency, and was a college professor for a while. And all along the way, these planetary studies kept intriguing me. So I at one point decided I was going to hang out a shingle and promote myself as an astrological analyst. It was a funny story, because at the time I was living in a rural area in western North Carolina. Had a young family. I was kind of trying to make ends meet, pay the mortgage, and my daughter was a first grader, 6 years old, going to the local public school, and the teacher asked the class, "What do you want to be when you grow up, kids?" And my daughter said, "I want to be an astrologer." And I'm not sure the teacher knew what that was, but she said, "Well, tell us, why do you want to do this?" She said, "Well, my daddy's an astrologer, and he helps people out a whole lot, and he makes $1,000 a year." Unfortunately, she was accurate on both counts.
What a great story.
That was kind of where the light bulb went off for me. I thought, okay, wait a minute, there is a connection to the markets here. I better figure out how this stuff works. So I spent a lot of years.
She brought your 1099 into show and tell, and
exactly.
It's interesting, Tim. You kind of come from a writing background, so that was my major in college too. So even in the markets, you can apply writing skills and speaking skills. And I was wondering if you want to talk about the time period in your life where most people would have felt really, really challenged, where you have a neurological disorder, we all at a time.
Quite an event there. This was back in the Memorial Day weekend of 2001, actually, some years back. And I had been working with the markets and the planets and had been publishing a newsletter for some time and getting pretty good at it, I thought, but if things were not quite gelling the way that I wanted in terms of market analysis at that point. I thought I had gotten the flu. And, it was a lot of coughing and stuff and went on. And so, like any normal human being, I tried to keep working for a few days. Eventually I went to bed and then woke up one morning and my feet were numb. And then it became a gradual paralysis that spread over my whole body. The doctors couldn't figure out what was going on. After a period of about 10 days, I was totally paralyzed. I was actually hallucinating because my eyelids were frozen open and I was sleeping with my eyes open. And it was threatening to shut down my respiratory tract when I finally got to the right hospital and got diagnosed. But I was paralyzed from head to toe for a couple of months and then had to, getting out of intensive care into the hospital, into a rehab facility. It was very much like having had a stroke and having to learn to use my entire body all over again. So it was quite a challenging process, but there was a lot of time when I could do nothing but just lie there and think. And so I chose to think about the markets and all the work I'd been studying and doing, and began to get some insights about how some of this stuff actually fits together that has proven to be very, very profitable ever since.
Wow. Well, yeah, you never know what you're made of until you face adversity. And, what a positive thing to focus on. I would have been focusing on my misery. So,
I learned mind over matter then, let's put it that way.
Yeah, I mean, congratulations with coming through that. And, I want to thank you for sending me a couple of books that one you authored yourself, the other one I want to ask you, but I'd like to start with Mercury, money, and the markets. And
right.
I'm dangerous enough with my knowledge. I follow some Gann stuff, planetary oppositions, eclipses, change of seasons, things like that. But I was fascinated by Mercury, and knowing nothing about astrology, I would guess that Mercury might be one of the more, I'm guessing, volatile planets because of the word mercurial nature. And perhaps that you chose this planet for the book because it offers a myriad of trading opportunities when you get the hang of it. Am I close?
Yeah, you're right on the money with that, Dale. It is that volatility. It's the most rapidly moving planet, outside of the movements of the moon, which is not really a planet, but from an astrological perspective, we consider it such. But the thing that intrigued me about Mercury is that it has these distinctive periods in which it has apparent retrograde motion. And looks like, from our perspective on Earth, that it's moving backwards in the sky. That's kind of an optical illusion, and we won't get into the celestial mechanics involved, but that happens about 3 times a year for about 3 weeks each time. And what I had discovered from my own experience was that trading becomes a little bit more difficult. It's a lot easier to misread market signals during those times. And so I decided it would make a good subject for some more rigorous empirical research. And that's what went into the book, Mercury, Money, and the Markets, doing a lot of back testing and trying to figure out what these dynamics actually are.
So was your initial belief of, markets being real choppy during those 3-week periods, your initial intuitive response would be to stand aside, or did you discover other things?
Well, what I've learned is we're going to make money in the markets, we have to be in the markets. And so we're talking about 18% of the year, 9-10 weeks out of the year, in which this phenomenon is in effect. And if we can afford to take that much vacation time, it's great. But personally, I wanted to stay engaged with the market activity. And so the question is how to work with this constructively and creatively. My own experience has been that when we have a period with Mercury retrograde, I tend to be more inclined to second guess my own judgment about the markets. I'll do the analysis, I'll figure out what the trade setup is needs to be, and then I'll convince myself to do something else at the last minute. So it's like I don't trust my own judgment, and that's an interesting thing. I think that's the way it impacts me personally.
All right,
but with the
be an
book,
interesting thing to look at.
Yeah,
well, I like that all year.
Yeah,
so
okay.
all right, so maybe we could move to the next slide, and you could tell us a little bit about
let me talk a little bit about some of the methodologies that we're using here, and what I'm interested in focusing on is some of the methodologies that we use to connect price movements with the planetary dynamics. And I think it's helpful for those who are inexperienced in this whole realm of endeavor to be able to see some of those correlations. This is a chart current as of yesterday for Bitcoin versus US dollar. And of course, we had that big historic run up last fall and almost to $20,000 per Bitcoin, and peaked out on December the 17th. And then, of course, there was a big pullback after that. I became curious in looking at this, and this is a technique right out of W.D. Gann studies, is that if we're trying to analyze any market, we're interested in looking at things from as long a time frame as we possibly can, and find out where the big highs and lows are, and then begin to base our analysis of cycles and market trends on those big turning points, and then refine the work from there. So, you know, the peak was obviously a classic parabolic move, speculative bubble, and so I was less concerned about the top of that market, but where things actually began to level off significantly at the end of that move. And so we're looking here in early February of this year when the big plunge stopped, and we've been in more or less a congested trading pattern ever since, began to define some levels of support with that move. So what I did was take a look then at what was going on when Bitcoin hit that trading bottom, and figure out what was happening planetarily with that. And we can go in and analyze the various configurations. In this case, we're looking at things heliocentrically here. With this, as Bitcoin hit that bottom, we have this list of the various alignments planetarily, Earth in a 135-degree angle to Saturn, Mercury conjunct Pluto, and the Mercury square to the trans-Neptunian factor Zeus. Mercury moves pretty fast here. Venus in a sextile to Saturn, that's a 60-degree or sixth harmonic alignment, and Venus to the trans-Neptunian factor Apollon in a third harmonic alignment. And what caught my attention here was the Venus-Saturn dynamic, because this happens relatively fast. We get can begin to collect enough iterations that we can do some significant backtesting with that. The Venus trine Apollon, because it's a 120-degree angle, moves not as frequently. So I wanted something that would move fairly rapidly to begin to define that. So what we did then was take all the previous iterations of that occurrence. Now, Bitcoin has only been trading for about, well, it's only been in existence for a little less than 10 years. So
I wanted to ask you about that, Tim, because I've talked to other people who really don't do, you know, a lot of in-depth analysis because they complain that there's not enough historical data.
I mean, that's a very, very valid argument, right?
What's your thought?
Well, right now, we look for the data that we've got, we analyze that, and we take that with a grain of salt. In other words, I'd rather begin the work and to try to determine what are the salient features of this without trying to take that to the bank with regularity, you know.
I see. All right, so
we want to use some common sense involved here. That's basically what we're after. Right?
Okay.
So, but then what we do is take those examples and back test it, and this is what the aggregate looks like. Again, that heliocentric sixth harmonic or 60-degree alignment between Venus and Saturn. With this particular chart, the middle point where the 0 is the exact date when that alignment occurs. And on average, we have a market that finds a bottom about 3 weeks prior to that with Bitcoin, and then accelerates through that. So this is what the pattern looks like. And there's some potential here for a positive dynamic coming out of that. It's enough to attract our interest. In other words, the market's not flat when that happens. The question is, what do we do with this information? So we go back to our chart here, and we're looking now at the dynamics between Venus and Saturn in the sixth harmonic. Now, there's a methodology called planetary price lines in which we can translate the positions of planets at any given time into a price equivalent in any market. It's one of the most valuable tools that we have in doing this kind of work. And so we can translate then the positions of Venus in the sixth harmonic and graph them out on this chart, and we get something that looks like this, kind of busy, but we are seeing these lines that are slanting at an angle representing the movements of Venus heliocentrically over time. And what we can do here is take out the sixth harmonic. These are the first harmonic lines, which represent the actual position of Venus, multiplied out by 360 degrees. So we can see that what Venus does is to find some interesting areas of support and resistance for Bitcoin trading.
Where do traders find this tool? Is this proprietary?
Well, this is a tool that's built into a piece of software called the Fibonacci Galactic Trader software. It is from PAS in St. Augustine, Florida, or Jacksonville, Florida. I think they moved to Jacksonville now. Okay. It's been around a while. The developer of this program was Jeannie Long, who took some work of other astrologers and really modeled this on W.D. Gann's work as well. Wow. If we look at some of Gann's charts, he will had this, looking at his actual trading charts, he would make notations in pencil on the charts and hand draw these lines, indicating levels of planetary support and resistance. Very, very intriguing tool. He never wrote about it extensively, but it's one of those things that we can see in evidence on his chart, and he would label it, this is a Mars line, this is a Jupiter line, and so forth. And we can, based on studying that work, then we've been able to computerize that, so we can simply calculate the positions of the planets, throw them on the chart, and see if there's a correspondence.
Yeah, he showed that to me when I had lunch with him one day.
Really? I hope you paid for the lunch.
and Jesse Livermore stood us up. But anyway, fascinating and interesting that you're open to, a lot of people that do their own work, they believe it's got to be, everything that they do, they created, but you're out there looking at the environment of people that have similar interests and integrating a tool that you didn't develop because it works for you.
Exactly. And
I should let go of the ego,
You're right. Yeah. I mean, and having that total paralysis experience, Dale, did a lot to remove ego along the way. We have to have a certain level of humility to do this work effectively, and so
I agree with you.
And I really view myself as a student, and what my real passion is what I call astro trading education, because this is fun stuff to use. It's very, very effective. I use it in my own trading. I coach traders. I have my publications, my website. But the real deal here is to be able to share this information so that everybody can benefit from it. And there's really a community of people who've been developing these tools, and we work to try to enhance them. which is not to say there aren't some egos involved and some competitive spirits along the way, but still. So we look at this in the sixth harmonic. These are just the Venus lines, and then we can go in and add the lines for Saturn. Now, we'll put those in here purple, and we get a very, very busy kind of a chart, but again, we're looking at this over a long time frame here. Let's see, let's take out those.
Wow, I feel like I just dropped some acid in the 60s.
Yeah, right, exactly.
Anyway,
it's all on heart, right? Okay.
Yeah, it's interesting. So, do you have a view going forward based upon this work?
Yeah, absolutely. We're going to move right on into that here, because what we're looking at here now, these are just the first harmonic lines with Saturn, and we can see then it's a well-defined Saturn trading channel in the first harmonic that Bitcoin is moving in. With those heavier lines, and of course we can do this. What we'll do is zoom in here a little bit so we can get a little closer picture. This heavier line just below the current trading range is about where Bitcoin is today. I checked it a little earlier this morning. It was in the $6,500 range. So what we're looking for is to find some support on that first harmonic Saturn line. But as we do this analysis then, and we look at this diagram, what's obvious is that the celestial event itself is not the ideal place to trade this. In fact, we want to be going back a couple of weeks if we're going to optimize this trade in anticipation of this. And then move into it and sell off a few days afterwards. So we can do the statistical analysis based on the iterations that we've got. We've got 14 examples of this in the history of Bitcoin. Again, not hugely significant from a statistical point of view, but what we're seeing here is that about 79% of the time, if we optimize this trade with this time frame, it turns out to be profitable. And so that's, to me, the kind of consistency that we're that becomes tradable. So our strategy here would be to trade this to buy Bitcoin 23 days before this sixth harmonic alignment between Venus and Saturn, and then sell it 4 days afterwards. So that would be the optimum trade. Then the next time we'll get to that point will be coming up in a couple of weeks from now. The 21st of August will be 23 days before the next alignment there. So we make the forecast and the projections on that basis, saying this is basically a swing trade. We'll be in it for a little over 3 weeks' time, and we would expect a move upward in Bitcoin on that basis.
Wow. Yeah, very interesting. What else do you have for us, Tim?
Well, one of the other things that we're looking at here is the ability to go back and look at historical events and try to solve the mystery of what's going on with them, and then use that as a frame of reference here in terms of our current trading as well. One of the things that I got interested in studying recently, I do a lot of backtesting and research and trying to correlate the current planetary alignments with their previous occurrences. One of the things that makes this particular discipline so unique is that we can project with a great deal of accuracy ahead of time when various planetary alignments are going to happen in the future. We also have a historical record of when they've occurred in the past. So all we have to do then is compare the market data from the past to the planetary alignments that occurred then, and see when those alignments are going to repeat in the future. Now, of course, the great caveat is past performance doesn't guarantee future results. We need to sneak that disclaimer in here somewhere. Yeah, yeah. But right. And it's certainly true of whatever analytical method we use. But right. If we find that there is a high probability or reliability of the past occurrences, then we can be a little bit more confident in the trading that we're making here. So one of the big events, of course, in market history occurred back in 1929 when we had the big crash in the market there. It was an interesting kind of dynamic the Dow hit a high, the incredible figure of 386.10. So, it's funny to look at these old numbers with the Dow, right? That was the all-time high at that point on the 3rd of September of that year. And of course, if you look at the history books, they say that the crash really began on the 24th of October, that Black Thursday there. And at that point, the Dow was at just shy of 300, 299.50. And that's when it became evident that there was a panic going on. And of course, the result of that was it dropped almost 30%, 29% in 5 trading days, which was totally mind-boggling for that time. But
so
what I became interested,
it's interesting, Tim. You point out this example and when they call the crash, because in '87 people talk about the October crash, but the high was actually in August, and
exactly.
We had that pullback like we had here in 28, 29, and then a failing rally into October before the collapse. So,
exactly. Right.
Yeah. Okay.
And so it's not, the crash doesn't initiate at the high necessarily,
Right. It's a capitulation phase.
Yeah. And so what's going on here is, if we look at this from a little bit a longer time frame, what actually set this whole thing up? Is the question I was trying to figure out. And when we go back a little bit farther, back to earlier 1927, we see this very congested trading picture here. This was not, it was a fairly short-term rally that went on, from all this. Basically, the question is, what triggered that? And how do we begin to time that upward move that indicates we may be into a rally which can then lead to a crash? It's not just the dynamics of what causes the market to fail, but what causes it to build to that peak. And in this case, it's not quite the same pattern as we saw in that Bitcoin chart. It was not a parabolic move straight up. It wasn't entirely speculative, although it was pretty energetic. It was not quite that kind of insane upward trend that we saw with that Bitcoin chart. So what I was looking at here is I discovered there was a solar eclipse back on the 17th of June in 1928. And between the time of that eclipse to that market high, we had an 88% gain in the Dow Jones Industrial Average over that 15-month period.
Wow.
And this is a pretty remarkable dynamic because of that specific eclipse. Now, again, without getting too deep in the weeds with the we
had a big eclipse last year. Is there any parallel?
Exactly. Well, that big eclipse last year occurred on August 21st, and it was quite dramatic because it was a path of totality that went across the entire North American continent, and it had a big impact, geopolitically as well as on the markets, and we look at both of those dynamics. And then what we do is look at eclipses in series. They occur over a certain period of time, a couple of thousand years, at 17-year to 18-year intervals. So roughly 18 years between eclipses in the same series. So when we have a current eclipse, we go back and say, now, when was the first one here? We had one in July, and we had to go back to like 1344 to find the first eclipse in that series, and we study all the eclipses in between. The one that occurred before the market crash in 1929, this one in June of 1928, was the first eclipse in what we call Saros Series 155. And so it was the first time that there was this whole new, from an astronomic point of view, occurrence of these eclipses, and they occur at 18-year intervals thereafter. So we saw with this first eclipse in that series a gain in the Dow of 88%. Then 18 years later, in 1946, we had that solar eclipse, and there was a 15% loss over a 15-month period. So we're using this 15-month period, arbitrarily here because of the time frame between that eclipse in 1927 and the market high or in 28 in the market high in 29. So in this case, in 1946, of course, we saw a big fall off shortly after that, but some bit of a rebound. So an interesting decline there, 15%. Then 18 years later, 1964, we got the eclipse on the 9th of July, and a 12% gain over 15 months. So nothing to compare to that 88% gain, but as we move ahead here and then look at 1982, we did see a pretty substantial gain there, and a pretty straight trend line, basically, from that eclipse without a lot of perturbation.
One more low into August.
Exactly.
That's how old I am. I was short down there. Go ahead.
Okay. Well, we'll all remember this one here. Okay.
Short IBM down there. All right. So here we are, 2000.
Yeah, 2001, and of course here we had 9/11 and the dot-com bubble bursting and all of that. So it was a very distressed market. But the interesting thing is it was only an 8% loss in the time frame following that eclipse. Now, this eclipse series, we've only had these iterations so far, and what's going on here is that the next one coming up happens this Saturday.
It's a partial though, right?
Yeah, these are partial eclipses, and as an eclipse series begins, they're visible near the poles of the Earth. And then there are always partial eclipses. As we move forward in the series, they move more and more closer to the equator, and they become move from partial eclipses to total eclipses. And then as the series ends, a few hundred years later, it will begin to taper off into partial eclipses again. So that's part of that natural cycle of eclipses. Each series has its own life cycle and rhythm, so to speak. So our notion here is that we can go back and look at some of these previous occurrences and say, okay, what's going on here with the market dynamics? Does this offer us a trading opportunity or not? And right now we're in the process of doing the final analysis, trying to figure out what's going to happen with this next eclipse. So this isn't, there's never a dull moment when this kind of works. There's always something coming up to take a look at.
It's fascinating. So do you have any expectations? Or you're working on it now?
Well, we're working on it.
I did notice you're still bullish. The market,
yeah, I am.
According to market time.
Bullish long term, and based on what we've seen during the previous eclipses in this series, I didn't average out these numbers, but we've had 5 previous iterations. 3 of those, were bullish for the 15-month period. And note that one was the 88% move and the other was 53%, 55%. So, we've got a much stronger bullish tendency coming out of this particular eclipse series. Again, we're dealing with relatively few iterations. The cool thing about this is that we actually have market history that we can look back on, going back to 1928 and see, okay, this is the way the market responded, and we can study that for the entire duration of this current eclipse series. That's fairly rare. A lot of times I'm going back to the 16th century trying to figure out what were the economic conditions along with an eclipse, and that gets a little sketchy. We don't have market records going back that far.
Okay. All right, so it was really great meeting you. Perhaps you want to put up your slide again, how people could contact you for
let
coaching.
Me show you a couple things here. I've been doing the Financial Cycles Weekly newsletter. We started that as a print newsletter back in 1987, and now it's all delivered via email. And we have that as a weekly publication, and typically highlight some of the dynamics in the market. We also track our model portfolio there as well. And with the model portfolio, we have do our stock picks of straight equities trades based on our astrological analysis. And for the last 16 years, we've had a pretty consistent pattern of market outperformance with that. The Dow has averaged about 7% return per year. The S&P about 8%. Our average has been about 36%. We've not had any losing years in the last 16 years with this astrologically based model portfolio. And again, past performance is no guarantee of future results, but this is what the past performance looks like as we've been able to track this over that period of time, and are very, very pleased with that. So we have our newsletter available with our website, also what we call our Gold Plus Elite membership program, in which we call that a done with you trading program. Our members in that group get on a conference call once a week. We do that on Sunday evening to talk about the upcoming trends in the markets and to describe our planned trades and go over that. And then they also get the access to trading charts for each of the things that we're trading that use those planetary price lines and give that extra astrological dynamic with the trading as well. So then each week in the newsletter, we include a section on the trade management. So we're recalibrating the stops for the active trades and things of that sort. Essentially, our strategy is to time our entry into positions astrologically. If the trade is successful, we trail the stop and then let the market decide when to take us out, rather than trying to make the decision about when to get out of a trade. So.
All right, I'd like to just wrap it with one final question. When you have this analysis, what are your risk management tools for trading astronomically?
Well, basically, we look at position sizing, and we standardize all of our exposure in the market to essentially the same position size, in terms of a dollar amount. We also set very aggressive stops based on the planetary price line analysis initially, and then we basically recalibrate those stops on a weekly basis. So this is designed.
Can I translate aggressive stops into low leverage and wide stops initially until the picture begins to confirm?
Exactly. Yeah.
Okay.
So yeah, and we do not typically take margined positions, and so we were taking smaller positions to demonstrate the efficacy of the model portfolio. It's up to our members to decide at a personal level how much risk exposure they're comfortable with, and so. What we do is basically look over our shoulder. Here's what we're doing with our trading, and that's why we call it a done with you program. We're not managing the money, and we're not saying it's a do-it-yourself thing, go figure it out. We're going to show you exactly how we're doing this on a week-to-week basis, and then you can trade along, with your own portfolio as you wish. So it's designed to be done in about 53 minutes a week. We spend 28 minutes on Sunday evening with our conference call, and then the remainder of that time is getting in, entering the trades, moving the stops, managing it. So it's really a hands-off kind of approach, allowing that risk management dynamic to manage the trades for us. So, if you want to be more aggressive and watch the computer screen 8 hours a day, you can do that. But this is designed for those who want to use.
Never changed any trade's destiny by staring.
I know.
By staring at it.
It doesn't change our ulcers, though.
At times, though, Tim, I do joke. I'll put my cursor over the candle and try and drag it in the direction. And then if that doesn't work, you're real desperate.
If you get the software that makes that work, Dale, let me know, and I'll incorporate it.
I've tried a magnet when I'm good. Anyway, what a great interview, Tim. I'm so glad I reached out to you, and appreciate you accepting to come here and talk about your work. For some reason, after talking to you for half an hour, I feel like going out and buying a Mercury Cougar with a Bitcoin. So, they were one of my favorite cars back in high school. And I'm really glad to meet you. You're now my trading warrior brother, and what an interesting perspective.
Thank you, Dale.
God, I'd love to learn.
That's what we're all about, training people how to do this for those who want to pursue it. It can be a little bit complex to try to understand it all, which is why we try to simplify it so that people can get engaged with it with a minimum amount of time and effort and get the benefits.
Okay, well, I'm going to say thank you once again, Tim. I'm going to put on my tinfoil hat and get under my pyramid for the rest of the training session. And it really was a pleasure meeting you.
Thank you so much. Take care. Bye-bye.
thank you for your time today. Everyone, that's Tim Bost. You can follow him on Twitter at Tim Bost, and there's his website, timbost.com. And thank you again, everyone. Have a great day. We'll see you tomorrow for investing.com Thursday. Good hunting. And remember, don't just count your pips, count your blessings. Adios. Thanks again, Tim.
Thank you.